Bob joining us now for a closing bell exchange. Stephanie Link from the street, Ken Mahoney from Mahoney Asset Management, Jim Lowell from Advisor Investments, and our own Rick Santelli. Thanks everybody for joining us. Good to see you. Stephanie, let me kick this off with you. What's your take post no taper? How do you want to allocate capital in your view?
Well, I think that September is certainly going to be a volatile month, or continue to be a volatile month. We had to get through a lot of things, Maria, and so far we've actually gotten through Syria and the FOMC and the Fed chair. Maybe we have a decision, or we actually know that maybe Janet Yellen is going to be running the Fed. So we got through 3 out of the 4. We still have to get through Washington, and with the markets up 4% in the last 2 weeks, up 10% from the June levels, I think expectations are obviously pretty high. So I still like the market. I think volatility, though, is going to remain, especially for the next 10 days. We have a little extra cash on hand, but the Fed basically just said rates are staying low, data dependent, so let's keep an eye on the data. And I still think you want to own the cyclicals, industrials, technology, and some selected financials.
Very good. Ken Mahoney, what are you doing with this market right now? I mean, we've had so many cross currents lately. The situation in Syria, you know, the deal with the debt ceiling. Now we've had the House passing the defunding of Obamacare as part of the continuing resolution. The Fed. What are you doing with your money?
Yeah, look, you have a lot of cross currents that are going on right now. And at the end of the day, you kind of have the haves and have-nots of the marketplace. You know, the haves are those aggressive investors who've been seeking out high beta stocks, you know, momentum stocks, areas like biotechnology, and be rewarded for it.
Right.
And the have-nots are those conservative investors, you know, who are in bond funds and have seen double-digit losses in some cases. And where you're probably going to see is a momentum shift. You're seeing people coming out of those bonds and into stocks. You know, investors love chasing performance. So forget about the asset allocation mix altogether, and they'll start chasing. So I think momentum is really going to help out stocks.
You think when they get their quarterly statements after the end of this month and they see how badly their bond funds did, maybe they'll start going to the stock funds at the IPO?
Yeah, but I don't think they can wait to the statements anymore. I think they click online and look at day by day what's happening.
Yeah.
And then momentum, I think, will continue in favor of stocks.
Well, we'll see if the money comes out of the bond market as it has this summer and finds a home in stocks, because we have been waiting for this great rotation that has not occurred yet. Jim, what do you make of that? Do you think we actually will start seeing an increasing exposure to equities post the Federal Reserve inaction?
I bet we already are, Maria. The reality is that investors who opted out of the equity side of the ledger over the last several years have missed out, obviously, on a remarkable rally. I don't think they're going to make the same mistake twice just by staying inside of bonds. But all the headlines telling investors to abandon bonds are really doing a disservice. The reality is you just need to figure out a smarter way to manage the income side of your overall portfolio. Simply abandoning bonds at any price and for any reason doesn't make a lot of sense to me.
Yeah. Rick Santelli, you know, a lot of Fed speak today. The greatest hawk on the Fed, Esther George, then Jim Bullard's comments to Maria, that hinting maybe we get a tapering next month sometime. What do you guys think about that? Is the market responding as such, do you think?
Well, most people on this floor would argue that after what happened on Wednesday, they would think that the next Fed chairman is going to have the responsibility of the grand exit, trying to figure out how to get us back from Mars, and maybe more importantly, trying to slow down, if not halt, some of these crisis surviving programs. As far as all the other issues, we continue to see that our guest you just spoke with is correct. It may be illogical to abandon all forms of fixed income from a redemption side on the funds, but it isn't about logic. Markets don't need to subscribe to logic. I think that dynamic will stay in place, and it will continue to wear down the positions. I don't think it's a great rotation. I think it'll be a consistent liquidation.
I want to get your take, all of you, on what St. Louis president of the Federal Reserve, James Bullard, told me earlier today. I spoke with Bullard. He said there could be a taper in October. He also said this about how much the employment picture played into the Fed's decision not to move this week. He mentioned the participation rate. Listen to this.
One of the things about the recent report, the recent employment report, was that unemployment went down, but labor force participation went down. So it kind of went down for the wrong reasons, and I think that weighed on the committee's mind as well.
Rick Santelli, we discussed this just this week, you know, or last week, about the participation rate. In my observation, what's your reaction? What is it going to take to move the needle on that participation rate?
Hey, I've had about 5 million observations that have said that over the last 3 years. I guess in the end, I thank him for speaking more honestly about the dynamics of employment and unemployment. Beyond that, we are not in a crisis. The Fed is doubling down on an ineffective strategy. I don't care how many academics with how many PhDs they have. It isn't the answer, and it's giving ground cover to a government that's looking for any life preserver to be political and cater to their bases in front of 2014 midterms.
All right, guys. Thank you all. Stephanie as well. We'll see you later. Thanks for your thoughts on markets today.
Thanks, everybody. Meanwhile, if you think J.P. Morgan...